the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. July proved to be another defining month for global markets, with precious metals continuing their impressive rally. According to the latest Golden Minutes July 2025 report by Rotbart Co, gold and silver surged on the back of rising inflation fears, a weakening U.S. dollar, and growing industrial demand, especially from green tech and clean energy sectors. Meanwhile, the U.S. dollar remains under pressure, with rate cut expectations and fiscal instability pushing investors toward safe haven assets. Platinum and palladium also emerged as top performers, while Bitcoin rebounded despite regulatory overhang. As the landscape shifts rapidly, how should investors then position themselves across metals, currencies, and broader assets? Well, to find out more, joining me now is Zvika Rotbart, who is the Director of Business Development at Rotbart Co. Zvika, welcome to the show.
Thank you very much, Hongbin. It's a pleasure to be here.
Thank you so much for joining us. Well, how would you describe the overall market sentiment last month?
Well, I would say last month's sentiment was a mixed one. On one hand, we saw the equities and stock markets performing very well. I think mostly on the hopes that central banks, especially the Federal Reserve, would ease sooner than later. On the other hand, ongoing geopolitical tensions, the growing fiscal risks, and slowing growth in key economies are keeping investors alert. So overall, I would say that the sentiment is mixed, yet cautious.
Okay. Well, 7 months into President Trump's second term, he has already shifted market sentiment here. So how do you see his policies, particularly the proposed tax cuts, impacting demand for gold as a safe haven asset?
Well, President Trump's new policies, especially his proposed tax cuts, in my opinion, can create a parallel effect. For the short term, we all know that tax cuts can boost the economy, boost the equity market, and boost growth, which in return may mean lower demand for safe haven assets. And for the medium to short term, tax cuts increase debt, and we're talking about an addition of $3.8 trillion to the U.S. debt. And that actually raises long-term concerns about debt sustainability and inflation. Historically speaking, when investors see rising debt, they turn to gold as a hedge. So while we may see short-term volatility, I believe that in the medium to long run, Trump's policies could actually support stronger demand for gold as both a store of value and safe haven asset.
Okay. Trump recently announced new tariffs on imported gold bars into the U.S. as well. What impact could these tariffs have on the global gold trade and U.S. residents? And do you expect this to create opportunities for Asian and other markets as well?
Well, just to mention, President Trump actually decided last week to cancel this proposed tariff. In my opinion, the main reason is that tariffs on imported gold bars into the U.S. will most likely raise the cost for American consumers and reduce the liquidity in the U.S. market. In theory, all of these can push demand offshore, creating great opportunities for precious metals hubs like Singapore, Hong Kong, and Dubai.
Okay. And, we're seeing heightened geopolitical tensions as well, from the ongoing war in Ukraine to instability in the Middle East and, of course, U.S.-China trade friction. How are these factors shaping investors' appetite right now?
Well, geopolitical tensions have always been a strong driver for the demand of gold and silver as safe haven assets. The ongoing conflicts between the Ukraine and Russia, all the tensions in the Middle East, and the never-ending China and U.S. trade frictions are already pushing investors to turn into precious metals as safe havens. The reason they're doing so is because bullion provides a globally recognized asset, which is highly liquid and have no counterparty risk. So in times of uncertainty, metals give investors the peace of mind that the wealth is being protected no matter the political or economical situation. And actually the trend that we're seeing at Rotbart Co is very, very clear. Clients are not only looking to enhance and grow their portfolio, they're looking for resilience and they're looking for protection.
Okay. So as the trade wars are escalating here, with Washington and Beijing trading fresh tariff threats, to what extent does this uncertainty reinforce gold's role as a hedge, and how might it affect industrial metals like silver and platinum that are critical to global supply chains?
Well, the trade tensions between Washington and Beijing are definitely reinforcing gold's role as a hedge. As we mentioned before, whenever uncertainty arises, investors usually flock to gold as it's been one of the few asset classes that hold its value across time and borders. But unlike gold, silver and platinum have industrial uses. They're critical to the supply chains in electronics, in the automobile industry, and renewable energy industry. So actually, tariffs and trade disruptions could tighten the supply, which may actually support higher prices in the future.
Right. Well, taking a look at gold price movements as well, prices surged early in the month but pulled back slightly. Was this profit-taking or driven by macro shifts?
That's a great question, actually. We did see gold surge earlier this month, and then we saw a slight pullback. In my opinion, it was more of profit-taking than actually a fundamental change in direction. The macro drop trends are all still here. So we see high geopolitical risk, ongoing inflation concern, and central banks' continuous purchases of gold, which all support gold price. So I would say that in the short term, traders may lock in gains, but in long term, the demand still remains intact.
Central banks have been some of the largest buyers of gold in recent years, particularly in Asia and the Middle East. So what does this trend tell us about the long-term role of gold in global finance, and how should private investors interpret these moves?
Well, central banks are usually diversifying reserves in order to protect against inflation and currency debasement. That's actually great news for private investors because I think it's a great and strong vote of confidence in gold's role as a long-term store of value. I would say that investors usually look at two main things when it comes to central banks. The first one is that central banks worldwide have been leading gold purchases. That tells us something very important. The gold remains a cornerstone of our financial system and currency stability. The second one, what we call de-dollarization. It actually signals a structural shift away from the U.S. dollar. We're seeing more and more countries are dumping U.S. dollars, dumping U.S. treasuries, and shifting into hard assets like gold and precious metals. Just to give it to you in numbers, the U.S. dollar share of global reserve currency declined by almost 10% in the last 10 years.
Well, taking a look at silver as well. Silver outpaced gold in July. To what extent is silver now being driven more by industrial demand than by monetary concerns?
I always say that silver is a unique type of metal. It has a dual personality. On one hand, it's a precious metal, but on the other hand, it's an industrial metal. In July specifically, I think it outperformed all other precious metals due to largely industry-driven uses. So we see high demand from solar panels use, electric vehicles, and advanced electronics that is surging, and that's actually giving silver a tailwind. Of course, silver still benefits when investors look for a hedge alongside gold, but right now, in my opinion, the industry story is the powerful driver after its surge.
And platinum and palladium, they have outperformed even gold and silver this year. What's driving that? Should investors diversify into PGMs?
Well, platinum and palladium are outperforming most asset classes this year, I think because of very, very strong industrial demand. We see it especially in the catalytic converters, the hydrogen fuel cells, and clean energy technologies. In addition to all that, there are heavy supply constraints coming from South Africa and Russia. So unlike gold and silver, platinum and palladium actually move more with industry than monetary policy, which makes them a great and smart diversification tool. What we're seeing at Rotbart Co is that clients increasingly adding platinum and palladium for both their scarcity value and to be exposed to future technologies.
Right. And it looks like Bitcoin has also climbed over 26% year to date. In your view, Zvika, how does Bitcoin compare to gold as a hedge in this market environment?
The short answer is that Bitcoin is not a hedge, in my opinion.
Okay.
Bitcoin has been long time referred to as digital gold, which in my opinion is far away from the truth. It definitely delivered strong returns this year, but it remains highly volatile and speculative. When comparing it to gold, that has a 5,000-year track record as a trusted store of value and liquid asset, it cannot serve as a hedge. Although many of our clients view Bitcoin as a high-risk growth asset, gold still remains the ultimate safe haven. In our company, we definitely think that there is room for both asset class in one portfolio.
Well, then heading into Q4, what are the biggest risks and opportunities you see for precious metals?
Looking at Q4, I think that the key risk would be persistent inflation, high interest rates, and the ongoing geopolitical tensions, and as I mentioned, all of which usually adds volatility to the market. So I would say the opportunities are the central bank's consistent buying, the resilient safe haven demand, due to the ongoing geopolitical tension and industrial demand for precious metals like silver and platinum in green energy. So I would say that, in short, precious metals remained well-positioned both as protection and as growth assets. On the risk side, I would say that a stronger than expected U.S. growth or perhaps a hawkish Fed could temporarily weigh on metals.
All right. Well, with that, then, what market indicators or policy signals are you closely watching right now?
At the moment, in our company, Rotbart Co, we're closely watching the U.S. interest rate and global inflation data. I think these are two main factors. In addition to that, we're closely watching currency moves, especially the U.S. dollars. All these indicators shape liquidity, investor sentiment, and ultimately the demand for gold, silver, platinum, and palladium.
All right. Some great insights from you there. Thank you so much, Zvika, for joining me today.
Thank you very much. It was a pleasure.
Thank you. That was Zvika Rotbart, Director of Business Development at Rotbart Co. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.